there's some breaking news coming in. The rupee has breached a fresh record low and it's trending currently at 83.95 against the US dollar. We have been seeing the rupee breaching fresh lows, especially after what was happening on the Asian markets and the weaker global cues that were coming in from the US as well. So this is all happening despite a dovish turn by the Fed. The dollar index has been hovering around the 102.8 mark. Markets are assessing greater chances of a US recession. The US ISM Services PMI that was released yesterday did show a bigger than expected rebound though, at about 51.4. That was against market expectations of about 51. Also, the jobs report, of course, was the latest that did signal a weaker than was being anticipated US economy, and that was primarily what was stoking concerns of a possible recession in the US markets, causing markets to price a larger 50 bips rate cut in September. The Japanese yen, meanwhile, did retreat from 7-month highs towards 145 per dollar. That was amidst the unwinding of carry trades slowing, while markets continue to assess diverging monetary policies. So all in all, a whole host of pull and push factors, but the rupee continues to very clearly have a weakening bias given what's been taking place in the Asian markets, alongside slightly contrarian action that's contrarian cues that are coming in from the USD. Clearly pressure, importers continuing to pile up on the rupee, but we will continue to keep a watch on the rupee. So far, we have been seeing the rupee weaken, but it's still not breached the 84 mark. So far, the commentary is that RBI intervention will prevent it from breaching that mark, but we will continue to bring more on that. Let's move on to the next stock in action, Syrma. That's also reported its first quarter numbers. The stock was down 8% at one point. It has come off the day's lows now, but the revenue has surged 93%, even as profit declined by 28% on the back of margin contraction. Puneet joins us with more details on that stock. Puneet?
Well, thanks for that. So it did show a really strong revenue growth this quarter, roughly 93% compared to the same time last year. But margins as well as profitability was down in this particular quarter. EBITDA was roughly down 1%, while net profit was down 28% in this particular quarter. Now, this has been led due to an increased focus of the company on the consumer business, which is margin dilutive at the moment. And they had grown roughly 166% for the consumer business, while other businesses such as industrial and automotive saw roughly 20 to 30% growth. Now, when you look at the key highlights, the company had export revenue of roughly 16% in this particular quarter, which is down from the 20% target they have for each quarter. And export also has higher margins, so that is another impact on them. The other thing is that, roast was down for the particular quarter as well. And they have mentioned that they are expecting in the next 3 quarters to have stronger growth. Now, there was a conference call held today at 10:30, and the management did highlight that over the next few quarters for FY25 specifically, they are expecting other high margin businesses to come back. That might have been potentially one of the reasons why the stock price has recovered from the day's low. But we also did speak to the management this morning, Mr. Gujral, the MD of Syrma SGS. Listen into what he had to say.